The great fear among investors is the stock market crash because these big sell-offs typically cause people to panic, sell at a loss, and then miss out on the big recovery. Well, I'm here to tell you that crashes don't happen overnight. There's always a signal that comes early so that you can get out before the big crash happens, be fully in cash, and be ready to take advantage of the opportunity that the crash presents. And I'm going to show you how to do it in this video. So let's dive into the topic. Major stock market crashes don't happen overnight. I'm going to show you on the chart how this works. The market is very good at predicting the big corrections, and it happens when there is a falling top and a break of the upward trend line. The big selling comes after this breakdown, and these sell-offs are what create great buying opportunities. So let's look at the most recent big crash, which was the COVID crash. And this happened, of course, in late February, early March 2020. Here is the upward, and you can see that that line was broken there in late February. That was the signal to sell before this happened. Now notice also that when the downward trend line was broken right here, that led to a great recovery. In fact, probably the second best market I've encountered in trading. The best was back in 1999. Let's look at another example. This was the more recent crash in January 2025. And again, drawing a line from here to here to here across those bottoms, you can see a triple top and then the break of the upward trend line and then a breakdown from the falling top and the big sell-off. But once again, look what happened after the crash. You sell up here, you're in cash to take advantage of the bounce through the downward trend line from a rising bottom and the big gain that came out of that. If we look at the very long-term chart of the S&P 500, you can see all the big crashes. There was the financial crisis in 2007 into 2008 and the big recovery. There were little mini crashes along the way. This is the COVID crash. This is the crash that we had when interest rates, when tariffs came into effect. This is the crash when interest rates came into effect. This is the COVID crash. This is the little correction that came at the end of 2018. Notice that all of them presented an opportunity. Sell there, buy it back. Sell there, buy it back. Or if you really just want to take the long-term view, stick with the market because over time, it always comes back. All right, well, let's take a look at the overall markets now, and I'll give you my analysis to figure out if we are more likely to go higher than lower in the next little while. This is my website, Stockscores.com. A reminder, as always, you can register for my free weekly email. It's right there. I pick stocks. The stocks tend to do pretty good. I've also got a 4-part class coming up in October. These are free, and so you can register for any of these free events here at Stockscores.com. But let's get into our work for the week, S&P 500. Let's start with the 1-month trend. And you can see that despite a little bit of weakness there, we're still in the upward trend line. And so the market remains bullish in the short term. And of course, the long-term picture is still quite bullish as well. Same scenario for the NASDAQ QQQ. Not as strong as the broader market. Tech stocks are underperforming a little bit, but the trend is still up. Buyers are in control. Let's take a look at the IWM, which is a small cap market. It hit resistance. I talked about the market likely stalling at this level simply because when markets rally into resistance, they usually get stuck. And so we're seeing that there on the small caps. And it was a little quieter week for the small caps this last week. However, the trend is still up and we should break through eventually. On the Canadian market, trend is up. Look at gold, which is one of the reasons the Canadian market is so strong, and trend is up, no falling tops, no break of an upward trend line. Oil a little more interesting because we are breaking this cycle of falling tops. So I'm starting to get a little more interested in oil. Still don't think it's a great market, but I am noticing that some of the oil companies are starting to look a little better. I've seen some pretty good gains in some of the oil companies off of the lows in April. All right, let's move along to currencies. The US dollar is kind of stuck in a range, but had a little bit of an up week, but still inside this trading range. So it's kind of a neutral chart there. On Bitcoin, GBTC, a little bit of weakness here. I'm concerned a little bit in the short term for Bitcoin because it is breaking that little upward trend line on the daily from a falling top. And so a little more negative in the short term. The 3-year outlook is still okay because we remain in an upward trend. Finally, take a look at the bond market. Bond market has moved up nicely in the month of September as investors start to price in lower interest rates or the expectation for lower interest rates. However, it's still not a hot market by any means. So my ratings then, bullish on all time frames for large cap stocks, NASDAQ, small cap, Canadian stocks, gold, neutral on oil, US dollar neutral, Bitcoin short-term bearish, that's a downgrade this week, but still long-term neutral, and bonds neutral on both time frames. All right, now we're going to get into the trade of the week, and this week I'm going to show you a swing trade on a stock that had big gains, and I'm going to apply some simple principles looking for abnormal activity and a break of a pullback. So this is the chart of NUAI, and it first captured our interest there on the 23rd when it started to trade with abnormal volume, abnormal price action. That's why there's those pink and yellow dots, which I call my action candle. You can learn more about action candles at my website, Stockscores.com. Here you have a pullback and a break of a pullback. This to me was the trade on NUAI. This is called an alpha echo. So it broke this pullback on a stock that was abnormal, breaking with an action candle with support here, a little over $1, about around $1.20. Stock doubled in the next 2 days. And that's a simple swing trade for those that don't want to be so active to day trade. You can take the same principles that I talk about every week for day trades and apply them to swing trading, apply them to position trading, and it works just as easily. And if you want to learn more about that, go to my website, Stockscores.com. Make sure you're registered for that free weekly email because I do pick stocks in there and they've got a pretty good record of success as you can see in the archive. Hope you've enjoyed this week's video. Click on the like button if you have, and if you have a comment about where you think the markets are going, up, down, or sideways, let me know. And most importantly, trade well.